Dom the Monko.
Fresh and Fit Moneyclips. Subscribe now and dive into the world of cryptocurrency with Myron, Fresh, and special guests Charlie and Miguel, aka Dollar Cost Crypto and Cultivate Crypto, on the Fresh and Fit Podcast Money Monday Show. Join this exclusive episode for the latest updates on crypto trends and gain insight into the exclusive course. Don't miss out. Tune in now and elevate your crypto knowledge with Myron, Fresh, Charlie, and Miguel on the Fresh and Fit Podcast Money Monday Show.
Anyway, we got two special guests in the house, Miguel and Charlie. You guys, please introduce yourself to the people in case they don't know.
Thank you. I'm Charlie. I run a YouTube channel called Cultivate Crypto. You can also find me on Twitter as well as Instagram under the same name, and co-founder of the Crypto Mindset course with Miguel, Dollar Cost Crypto here. And we've been doing this. I think this is our 11th or 12th one that we've done since September of 2020. So
Nice.
Trying to get people into the market. Instead of selling when the market's like crazy high, right? We try to get people into the market where there's an opportunity for each course, for each quarter.
Nice. If they had taken action when you guys were last year, which I think was September of last year, right?
Yeah, the week of September 11th.
Crypto was at like all-time lows. Like Ethereum was at like hitting like $1,400.
Yeah, Bitcoin was 24,900.
Yep.
I remember they said crypto was a scam.
Yeah.
It's down. It's never come back up. You guys are telling people, invest now while it's low, bank on it, and you're right.
Yeah. And all the people who did, like the guys, especially a lot of the guys that came from FreshandFit, they're like, I'm so glad that I basically was introduced to you guys' information through Fresh and Myron, and is worth way more than what the course actually costs.
A lot of times, right? A lot of these guys that make money from crypto, or especially in the top levels of the hierarchy, they get a plug or they get a talk or play beforehand what to buy. So they're telling you what to buy, the best guarantee possible, and also these stable coins as crypto and Ethereum. So I think it's a really good spot, man.
Yeah. What about you, Miguel?
So Miguel, Dollar Cost Crypto, Crypto Degenerate Extraordinaire. We've been teaching about crypto for it's going to be quite a few years now, since 2020. But I think it's like 4 years in September.
Yeah.
So we've been teaching a whole market cycle. One full cycle, that's right. Because cryptos go in 4-year cycles. But we were here in multiple lows. Like, we like to come on here when crypto's at the best deal. Like, we don't want to come here when the price is literally at all-time highs, right? We want to make sure that it's a spot where everyone, even if you don't get in, you're able to get value out of it and stuff, and make some money and stuff, and then you'll see like, oh, this shit is real, because it really is real. Because it's going to get to a point where when the nightclubs are full of crypto bros and NFT guys, 18-year-olds driving Lambos, doing all kinds of crazy stuff, it's going to happen again, right? But you want to get in before all that. So before every Uber driver's telling you about crypto. Like, I've got Dogecoin, Dogecoin.
Like last time.
Yep.
Yeah.
It happens it happens in stocks. It happens everywhere. Eventually, when the market gets hot enough, everyone's talking about it, and that's,
You know how I know it's bad? When my mom said, son, what is crypto? I'm like, wait, you know what crypto too? Shoot. Oh, hell no. Hell no.
Number one, rumble.com/FreshFit, guys. We are on Rumble. I know you guys are probably like, yo, what, Myron, Fresh, why are y'all on Rumble? Well, content like this is not safe for YouTube a lot of the time. So, you got to be able to, say and do what you want to do over there on Rumble on the other side of the internet.
Let's get ready to rumble!
All right. So can you guys give us, obviously a lot has changed in the market, right? Can you guys kind of give us an overview and a summary of what went down? Obviously, there was a lot of highs and lows, especially last year. But now it looks like 2024, first quarter, we're up to a really solid start with cryptocurrency being very high numbers. What went down?
Yeah, so like me and Miguel kind of like take a few different takes, but then we merge it together. So I'm more on the technical side, like looking at the charts and where the price is going, cycle timing and stuff like that. Miguel's more on the fundamental side, but of course those things always mix. But like the biggest thing that happened since the last time we were on the show was Bitcoin's ETF approval. So I think it was back in August of last year.
Hey, can you tell the people what an ETF is real quick?
Yeah, it's an exchange traded fund. It's basically an IOU for the underlying asset. So if you want to buy gold and trade it globally, you're not going to do that with physical gold. So you can buy an ETF. You can also use it to hedge your positions if you have like a lot of something, stuff like that. But basically for Bitcoin, it's BlackRock has the ETF along with Fidelity and Grayscale. They have some of the largest ones, and so it's a way for you to buy Bitcoin.
It's almost like kind of getting a share into something.
Yeah,
right. It's like a share, and it tracks the price of Bitcoin for the most part, but.
And they usually fractionalize it too. They make it really cheap, so you can buy like $4 at a time.
Yeah,
right. Okay. It might be over and undervalued, but you can, the boomers can buy it. People can put it in their 401k.
Stock people can buy it. Exactly. So basically, they took Bitcoin and they made it into an ETF, which is huge.
Right, and that people have been trying to do that since 2014.
Yeah.
So it's been 10 years in the making, and Gary Gensler still, when he put out the letter that said, "Hey, we're going to allow the Bitcoin ETF," he basically he said, I still don't recommend Bitcoin in the last paragraph. He's like, it's still whatever. And then you have Vanguard actually saying we're not going to list the ETF at all. Because we don't like Bitcoin at this stage. A lot of banks, kind of scared of Bitcoin. Yeah.
So which exchanges have it? What's the ETF? What is it? Is it BTC or something like that? Probably.
So there's 11 of them, and now
11 Bitcoin ETFs.
They approved all of them, so you can just launch one now.
Yeah.
Oh shit.
Yeah, but it's got to be strictly Bitcoin.
Yeah, and like some of them are it's really competitive. I think there's probably only going to be like 3 or 4 that survive. But yeah, you got Grayscale, which is. I think they still have the same ticker, but basically it's Grayscale. We have ARK Invest, which is Kathy Wood's company. We have Fidelity, and we have BlackRock. BlackRock is probably the most famous one. It's just iShares, Bitcoin Trust.
Yeah.
Okay.
Yeah.
But BlackRock's the big one because that's
if for the boomers out there that are watching right now, if they want to go ahead and get some Bitcoin on BlackRock, probably that's the best way to go.
And they have $2 billion worth of Bitcoin backing up that ETF already, and that's within the first month.
And before they even did this, they were purchasing like 5 or 6% of all these mining. So we had a lot of crypto mining companies. So that anyone that was public, BlackRock was buying them. So they have a source to buy Bitcoin as well. So they own a good chunk of the Bitcoin mining sector.
They're buying everything, bro.
Yep,
all the assets,
dude. I've been saying it forever. Whatever BlackRock is buying, you got to buy too. People say, "Oh, don't buy real estate," but what is BlackRock doing? They're buying single-family homes.
Yep.
Don't buy cryptocurrency. What are they doing? They created a fucking ETF for Bitcoin, and they wouldn't have created that ETF if they hadn't already known that it was going to be the future.
Yeah.
You know what I mean? So
it's the first step towards mass adoption.
Yep. Yeah.
Because now it's like once you have the banks, or at least the majority of the banks, saying, "Hey, we approve of this. It's okay. You can trade it." Then all of a sudden, the stigma of crypto's scammy, it's whatever, starts going away. And by about 2030, by the end of this decade, we're pretty much going to see, it's kind of like email. Back in like 1994, people were like, I don't need an email address. I don't need to use this technology. I got my postal mail. I got fax. What's gonna benefit me from this? By 1998, every housewife had like 5 different email addresses, right? It's going to be the same thing with crypto, because not only with the ETFs, but the central bank digital currencies that they're trying to push, if the governments are successful with that, then essentially you'll have to know how to send and receive a cryptocurrency or something on the blockchain. A digital asset is what they're going to call it. And everybody will have to learn how to do that in order to be able to use the central bank digital currency. So in a way, we have the government and also the banks right now, which have been against Bitcoin for so long, finally starting to be like, okay, we can use this technology, and by using it, even if it's tangential in the form of a central bank digital currency, they're giving approval to it to some extent, right? They have to regulate it now. They have to make it a part of the market, and then they're going towards tokenized securities at the end of the decade as well. You'll be able to trade like Tesla stock through a blockchain, so that way you can trade it 24/7, 365. That's going to change markets. The Japanese stock exchange in Osaka, which is their second main exchange, is already testing all of that technology out.
So this whole Monday through Friday, not 8 to 5, is going to be gone soon.
Yeah.
It's going to be possible to trade outside of that. And so they're probably not going to want to, circumvent the CME and all of this, the Chicago Mercantile Exchange and the NASDAQ and all these things. So they're still going to have like their hardcore way of trading, but then they're going to say, hey, if you want to do a derivative, which is our tokenized asset, right? It's not the main assets. It may be like a representation of an IOU of the main asset. You can go trade it on chain 24/7. And that then they'll have to match the price on opening probably to what's going on in the crypto side.
Wow. Yeah.
And Larry Fink from BlackRock said that specifically. That's what he's going to do.
Yeah, that's the guy running BlackRock.
Yeah.
So we're moving into like a cashless society where like most people aren't going to use cash anymore, right? And we've seen it in video games online. You spend money, you get tokens in the game, and you buy items, right? But when it comes to actually like video games, what's the future you think with Bitcoin as well?
Oh, it's going to be some version of like Ready Player One, something like that. I mean, it's not going to be all the way like
Ready Player One.
It's not going to be like all the way like everyone's living in a trailer park home. But it's going to be a version of like, you work in this game or you work in a real life job, you make your money in stable coins, and then from there you just purchase stuff online and it just shows up to your door. So it's going to be like, so you could be in a video game and because it's not games now, but it's gonna be games in the future where like it's gonna be open. You can trade them, and then you could use those game coins or skins after killing somebody you won their loot. You could sell that off and then use that to go buy like new gear or go buy clothes or go buy water or pay your rent and stuff. You just that's because all this stuff's worth value because if people want it, then it has value. Right, wow. It's just like when people were playing World of Warcraft, there was Chinese gold miners. Like you were not allowed to sell your WoW gold, but people were still buying it for what I think it was like $12 for like 10,000 gold or like I forgot how much it was back in the day, but. And that's what's in the legal market. With a legal market, it then becomes like a free flowing kind of currency that can really appreciate in value.
What we're seeing is cryptocurrency is slowly becoming more and more and more legit. It's becoming more and more mainstream, which obviously for the hardcore people are like, no, fuck this shit is gonna go into normie land. But on the other side, the more it becomes legit, the more it goes up in value, and the more your investment that you put in prior, pays off.
Right.
And the fact that it's an ETF is huge because for the boomers out there that like to invest in VOO or in the Vanguard stock, they like to invest in like ETFs.
Yeah.
Right. VO, I think if I'm not mistaken, is like the total market exchange or the S&P 500 because people like to invest in like index funds, right? Safe, nice ETF index
safe,
funds.
That's why.
Right. But now that Bitcoin has its own ETF through BlackRock, and we know that BlackRock, a lot of the times, as much as we criticize them and say, hey, it's the elites and evil, whatever, they pretty much, whatever they're investing in is what you should invest in, right? And they're investing in single-family homes, but they're not telling anyone that. They're silently buying single-family homes under other people. Now we know that they created this ETF and a couple other companies have. I would say at this point, you can't talk shit about Bitcoin no more. It's here to stay. Now that they made it an ETF.
If you can't beat them, join them, honestly.
Yeah.
At this point.
For all the people out that say, cryptocurrency is a scam, blah, blah, blah. And I used to think that too. I remember when I had my first consult with Charlie, 2-3 years ago now at this point.
End of 2019.
I was skeptical too. I was like, what the fuck is this shit, Bitcoin? This makes no sense. And he was like, look, man, and I bought it. It was around $3,000 at the time. I'm glad I bought it. I think I bought like a quarter of a coin or half a coin at that point. And the only thing I'm like pissed off now is that I wish I bought more.
I remember I saw your portfolio. I said, yo, hold on a second here. You made all this money? Count me into it, bro.
I remember at the time, right, I was like, hey, go in with what you're willing to lose, that kind of thing and stuff. But there was also some other people around us in that space at the time. They were like humming and hawing. You actually like bit the bullet and did it.
Yeah, of course.
Most of those people who were humming and hawing about a year later, they were buying way higher.
Way higher.
Yeah.
And so, and then kind of to your point here about mainstream adoption is, we have these phases, right? The first phase of crypto back in the early days was first they ignore you. Then the next stage is then they laugh at you. Oh, it's just like a meme coin, it's a penny stock, whatever. Then they fight you. Mm-hmm. That's the stage we're in now, where the governments and banks are like, okay, we got to resist this a little bit. The next stage after that is then you win. So I think by once we get into the 2030s, crypto's so mainstream, just like the tech boom, that everybody's using it, and people are like, okay, this is a thing now. But they're going to call it digital assets. Crypto still will have some sort of tainted name related to it.
Of course. But the fact that I really want the audience to know, the fact that BlackRock made an ETF on it tells you it's here to stay.
Yep.
They typically don't miss when it comes to what they're going to purchase from an investment perspective. They're buying single family homes and they just turn Bitcoin into an ETF. I mean, those are the signs right there that these are asset classes you want to invest in.
Now we're not telling people just to go out and buy the ETF, but we're telling people to go on Coinbase or Kraken or Gemini or Crypto.com and go buy Bitcoin and put it in your custody.
Yeah, actually own the asset.
Because we like to be. We always say we're the red pill of finance. We want you to be awakened, right? have control of your money, have your Bitcoin in your wallet, because if an exchange goes down, it's gone. If something happens, you know, like what happened with Robinhood, right? You were winning on fucking on a what's called GameStop, right? And then you're about to make a shit ton of money, and then they freeze it on your ass. You still have it, but they just robbed you out of all that money you could have made. But when the Bitcoin's in your custody, you can sell it at any time.
Yeah,
and that's the big difference, is they can't shut it down, and that's what they hate about it. But they're also addicted to the money. They know where it's going. Like, they don't like seeing all these millennials and all these fucking Zoomers and some of these extras make all this money. They're like, we got to get a piece of it. So they've been slowly, you know, accumulating. I mean, what's it called? Fidelity's been mining Bitcoin since 2014.
They'll never say that, though.
They'll never say that and stuff, but it came out years later. I think it came out in 2018 that they've been in the market since 2014.
Yep.
They've been slowly accumulating. I think out of the big players, the only one that's kind of out right now is Vanguard. Vanguard's actually looking kind of dumb right now.
Yeah.
Because they're not
Goldman Sachs has been involved with cryptocurrency for a very long time, too. They just won't admit it. Like,
they're bullish on Ethereum. There was one report they let out about a year and a half, 2 years ago, saying like, hey, we kind of like Ethereum and stuff, but it was like middle of the bear market. Nobody's paying attention. It's all dead. And they haven't said anything since. Like, they've been very quiet.
You know, it's interesting because, right, and I've noticed this. I don't know if you guys, like, I want you guys to really pay attention to the mainstream news, which is why you shouldn't watch the mainstream news, but you should watch it just to see the bullshit that they go. Some representative will go on CNBC or some other bullshit like the MNSB, whatever, NBC, whatever the fuck, right? CNN, whatever. They'll go in there and they'll say, oh, the housing market's going to crash.
Yeah.
Oh, cryptocurrency is a scam. It's bullshit, blah, blah, blah. And there'll be a representative of a big bank like a Goldman Sachs, a BlackRock, or whatever. The representative will go over there and tell you guys that this asset class is going to crash. But silently, if you actually look at what they're doing, you see they're buying single-family homes. They're buying cryptocurrency. They're mining it in some instances. But the representative will go on these big, financial news talk shows and say negative things about it. Why? Because they don't want you to buy it. They want to buy it, and then when it goes up, they're like, "Oh, we got all of it, motherfuckers." And that's what they've been doing. Like this wasn't like, you don't just make an ETF out of nowhere. They've been planning this probably for years.
The great thing is, like, Jamie Dimon's the poster child for, you know, basically saying crypto sucks.
Yeah.
And every time he does is like the worst time, good time in the market to buy. And every time he's like, maybe I'll lay off of it for now. Top of the market. And so, like, and in the background, right, JP Morgan's like doing all these reports basically saying, hey, this is what we think about crypto, and we're involved with an asset class, and they're even actually closely tied to Coinbase in the background as well.
Yeah. You know, because the traditional financial advice, what do they always tell you? Oh, invest in the S&P 500. That's what that's what everybody says. If you go ahead and you go with a financial advisor, they're always going to tell you, invest in S&P 500. Yeah, that's true. Traditionally,
all-time highs.
It's not going to go in. It's always going to appreciate. Typically, you're not going to lose money. It's very safe. It's one of the safest things. That's what all the boomers invest in. But are you going to make a bunch of money? Probably not, right? But they're not going to tell you, oh yeah, go buy real estate, single family homes, or go buy Bitcoin. They're going to tell you, no, fuck that shit. Like, no, it's terrible. The market's going to crash. Woo!
Even creators, they push certain funds because they get paid or sponsored from it.
Yep.
But Bitcoin, I mean, pretty much like, oh, don't buy that, man. It's risky. You know, you don't know what you're doing. But guess what? You got Miguel Charlie here to help you get the right coins.
Yeah.
So what we usually say for people is they need 3 skills within crypto to understand how to analyze the market correctly, which is technical analysis, fundamental analysis, and on-chain data. On-chain data probably being the most foreign to everybody because it's blockchain specific. If you can understand the basics of each of those 3 and then go deep into one, that's going to be your power play. So you can there's profit-taking strategies with each of them, but you want to learn all 3. If you haven't started with any of them, go with what you learn best. So for example, if you're a visual learner like me, then basically you'll go towards technical analysis most likely. If you're an auditory type learner like Miguel, you might go more towards fundamentals and news-based analysis. If you're like a data quant type person, you might go more towards on-chain. But generally speaking, build your skills. If you watch both of our YouTubes for free, we do streams 4 to 5 days a week, every single week when we are not doing the course. When we're doing the course, the whole month of February will be offline, dedicated to everybody in the crypto mindset course. But yeah, if he learns on my show every day, I go through what are we looking at on-chain, what are we looking at in the news, and then what are we looking at with the price, the technical analysis of this. And a lot of the times the on-chain data actually is a good place to find, like, hey, we have like a local top, or we have kind of the market moving too far. So go and watch those streams. If you probably watch something like about a month and a half to 2 months of content of the last couple of months, then you're like, okay, I get the lingo, I get what they're talking about. So that's why we do the YouTube absolutely for free every single day, is for the fact that, you know, we know there's a lot of people out there that just need to start and make some money. And then once they've made money with us for, you know, 3, 6, 9 months, whatever it is, then come take the course once you're ready.
Yeah, that's fair enough, man. Yeah, man. If you guys can't afford the course, that's totally cool. It's live right now, by the way, so you guys want to get in there. But if you can't afford it, it's fine. We'll try to give you guys as much free value as we can. But it's pinned in the comments, guys, and at the top of the description as well.
So if you want to talk about the dangers, but then also like the positives about farming, because like there can be some it's not passive gains in crypto, but it's compound gains.
Right. So there's two big ways. Either you're ratio trading, which means like you're selling your asset into an asset that moves in tandem with something, and then at some points it out pumps it, and then you sell it into that asset. It comes down and you trade back into it, and then you've made more coins. Or your yield farming, which is a lot more riskier because you're putting your asset with another asset and the prices move around, and you can incur something called like impermanent loss, but it pays like a dividend out on like every second. So you're able to collect it all the time and stuff like that. But I would probably recommend, I would just hold the assets and not try to, like, I would rather you sell some on the way up and put that cash away for your business rather than try, because like you should only be doing this stuff if you're paying attention. You can buy and hold, that's fine, and can pay attention to your business. That's how I started. I wasn't able to be 100% crypto when I started, so I just bought and hold. But if you're trying to actively get income, this is where people get in trouble. This is where most people lost a lot of smart guys lost a lot of money on stuff like Luna, Celsius, Voyager and stuff, because they went on these platforms. Oh, these guys are guaranteeing me 9% a year. Cool. Or let me put my stablecoin to gain 20% a year. Nice, super safe. And then they go down and they lost all their money. Damn. So sometimes that 20% or 9% ain't worth 100% of their fucking money. It's not worth it at all. So there's ways to safely do it. Like there's some coins you can stake Hex, and that you ain't gonna lose coins, but the coin could go up and down in value, right? You can stake your Phantom. There's ways to do it. There's some coins that lend themselves where you can stake it and leave it alone, but other ones are like extremely active, and I wouldn't recommend doing that and stuff like that. So
you want to focus on long-term goals. So another way to put it, like as well, if you're doing all of these different things we talk about in the course to make increase your stack, then basically what I would say is make the money between now and the next 1 to 1.5 years. Then easy, right? Take a third out and then save that for taxes and anything you might need to spend. Take a third out and use that to reinvest in the market. The other third, so let's say you made $1 million and you have like $333,000 that you then can use to spend on things, whether that's Lamboing out, or whether that's starting reinvesting in your own business or stuff like that. Try to take advantage of the whole market and have a little bit more patience. I think it's usually the people who try to hit stuff within a week, a month, short-term time frames, where they tend to lose money because they get chopped up without being clear on their goal. The
coins, unlike in stocks, right? So, like some people are invested in dividend stocks, and that's a strategy, right? Or people are like stocks. If you're investing into an ETF, it's roughly going to do, like, if you're in the S&P 500, you might do 7 to 12% a year. Decent, right? But in one good year of crypto, a coin could go up 5 times. Bitcoin itself is up 3 times from the bottom. It's Bitcoin, the safest thing, the most boomers of coins, the boomer coin of all time, Bitcoin. It's up 3 times from the bottom. Ethereum's up that much. Some of these altcoins are gonna, if you're in a coin, it just holding it will appreciate in value so much that the dividends payouts doesn't matter really. I wouldn't even stake Ethereum, just because here's the problem is it takes 32 Ethereum to stake Ethereum by yourself. Okay, by yourself 32 Ethereum. That's a lot. I think it's $78,000. That's a lot. That's a lot of money, right? So what happens is the average guy will go, okay, I'll just leave it on Coinbase. On Kraken, and I like Coinbase, but they'll leave it on Coinbase, they'll leave it on Kraken, they'll leave it on Gemini, they'll leave it on Crypto.com, all reputable. That's the big 4 in America, right? One of them goes down during what happened in 2022. Almost everything crashed. Everything went down. FTX. I mean,
Celsius.
Dude, all these
hedge funds.
Sam. Yeah, well, them boys.
Sam
them boys. Yeah.
Gotta get that lockup sound.
Actually, it was the FBI that came after him.
FBI, open up!
Oh yeah.
No longer freed.
Yeah. Even like passive, and this is the whole thing about passive.
Hey man, that's pretty good.
That's good. I like that.
But passive income, I always laugh at passive income. It's never passive. It's never passive. You have to watch it and stuff. I mean, you could make some passive income. It's cool, but you're either taking a huge cut someone's taking a huge cut to manage it for you, or the other side is that like you don't realize the risk in it.
So you recommend to buy and hold for beginners.
Yeah.
And if you're more advanced and you want to take that
play.
risk,
You can play.
stake if you want to.
Yeah.
Yeah,
Okay.
you have to understand your risk.
I would say the trading is more intermediate, and then I would like everything is once you have a certain amount of kind of experience in the space, then you could try to do it. But I would only recommend if you're going to trade 10 to 20% maximum of the portfolio. That's it until you really get your bearings, and then from there you have to. There's a certain time in your portfolio value that you're going to choose. Okay, am I going to be the guy because there's all these investors. Like, am I going to be the trading guy? Am I going to be just the buy and hold guy, or am I going to be like the guy that tries to compound through like yield farming?
Thank you for tuning into an Enlightening Money Monday episode on the Fresh and Fit podcast. For exclusive insight on cryptocurrency and their incredible course, subscribe now. Stay ahead of the crypto game with Myron, Fresh, Charlie, and Miguel. Hit that subscribe button and join us for more in-depth discussions. Subscribe, stay informed, and keep it fresh on the Fresh and Fit podcast. Push it to the limit.